Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Hi there. Welcome to another exciting edition of the only show that truly matters. Oh, here he goes with that pretension again. The only show that really matters for your future, because everything else is about your today. It's about what's happening in the world. It's about improving your immediate life. This is a show about improving your long-term future. Now, there are other shows that profess to do the same thing. I've just listened to them and checked them out. As a matter of fact, I'm going to talk about one of them today, not by name, but just I'm going to give you some of the facts about some of the other folks out there spouting off about investing. And I believe that most of them, not all, there are a couple that are very good at what they do. Most of them, though, are out there to rip you off. This one is not. This show exists to educate you, just as I've been doing and my co-host Tom has been doing for decades, literally decades. So I want to help. I do. I want to help you get money under control in your life. I'm Don McDonald. Tom has taken the weekend off, and you can call me, though, at 877-397-5666 to get a little help with your financial situation, particularly with investing, understanding this whole fiduciary thing. We're going to talk about that in a little bit, stocks and bonds and mutual funds and tigers and bears and oh my. And speaking of which, I'm in California now. It's kind of ironic. I live in Florida right next to Disney World. And now I'm sitting in a Disney hotel in Southern California right next to Disneyland because a friend who works for the Walt Disney Company got married yesterday. So my wife and I came 3,000 miles to hang out around Disney again and go to the wedding. So now I'm sitting here in the hotel looking out over Anaheim, California, and it's just a lot of low-rise houses. Although they do have some very pretty purple trees out here. So give me a call, 877-397-5666. This is kind of a weird weekend. We came out to California on Wednesday and discovered that there was a big press event going on here. So I'm like, radio guy, and there are all these radio and TV people all over the place at a press event that I didn't even know existed. Had I known, I would have probably gotten into the press event, but I had no idea. For the Guardians of the Galaxy ride, which they took the Tower of Terror and changed it. And get this, the line to ride that new ride is 5 hours long. Would you stand in line for 5 hours to ride a ride? Think about that for a minute. If you had movies downloaded to your phone, you could watch a triple feature before you got to the ride. That's outrageous. No, I'm not going over there to ride the ride. 877-397-5666 is our phone number here. That's 877-397-5666. And the bribe, because it's holiday weekend, the bribe rule is in effect. This is your way to get, not only to get your question answered, but to get $15 off, which with a charter subscription is a full year for free of Real Investing Journal, the only real investing magazine anywhere in the country that I've been able to find, and I've looked everywhere. I can't find one. This is it. Real Investing Journal is free. Just call, be a part of the show. You have to call and ask a question because that benefits all of us, all the other listeners. There is a little, it's a bribe, and bribes always come with strings attached. That is the string that's attached. Coming up in a little bit, I do want to talk to you about something that is critical to your investing future, and that is whether or not the person giving you advice is doing what is absolutely best for you. We've talked about this a lot, but it was just determined recently that the Labor Department's rule on all retirement investing advice being required to be in your best interest is going to go into effect on June 9th. So that means that unless something changes, for now, that everybody who advises on retirement investing must do what's right for you. In other words, act as a fiduciary. What does that mean? What should you watch for? What's it doing to the industry? Call me. Are your advisors fiduciaries? You probably don't know.
Tom and Don are talking real money.
Here's another brief interruption. I am surprised at how much people still love their magazines, their print magazines. The vast majority of the most popular magazines on the planet have millions of print subscribers and only a few 100,000 online subscribers. I learned people like reading on paper, and because of that, I've decided to create a brand new magazine for real investors to help you become a real investor. It's called Real Investing Journal, and it's full of just that, real investing information, the science of investing, the proven ways to make money long-term without gambling. There's no business news. There's nothing about speculating. There's no lifestyle stuff. It is all about investing all the time. It's a full-color magazine. It's printed every quarter, and it's going to cost $25 a year is all. That's all, $25 a year. But here's the deal. If you become one of our charter subscribers, we'll lock in $15 a year, and while supplies last, you'll get the very first issue in addition to your next year. That's a deal. $15 a year, and if you don't like it, I'll give you your money back. That simple. So go right now to realinvestingjournal.com/subscribe. You need to add that /subscribe. realinvestingjournal.com/subscribe and sign up for the charter subscription rate of only $15. You save $10 and you lock it in, and you get an extra issue. And you need to do it now because I know we're going to run out of the extra issues, so you better hurry. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. You'll like it or your money back. And speaking of back, we're going back to the show now.
For your real life and real future, Tom and Don are talking real money.
Because you deserve to enjoy the best life possible, and to do that, you deserve the best investing advice possible. You deserve it. You should be getting it from everyone. And because you're not, Tom and I will never, ever, ever want for work. We just won't. Tom is off for the weekend. I'm sitting in alone in California, Los Angeles area. I'm actually in Anaheim at a hotel at Disneyland, looking out the window at the parking lot for Disneyland and trying to help you manage your money. 877-397-5666 is our phone number. Remember to call on Saturdays, noon Pacific time, 3 p.m. Eastern, no matter where you listen. 877-397-5666. It's a radio show that's also a podcast. And because we didn't expect a ton of calls this week, to encourage you to call with your questions, we'll sweeten the deal. Not only will you get advice right here from me, which should be good enough, but it isn't. You will also get a year worth of advice from me and others in Real Investing Journal, the only magazine specifically devoted to investing, not speculating, not business, not lifestyle. It's just investing, period. How to build portfolios properly, how to manage risk properly, the research that goes into all of this, and how to create income streams, all of that. We do it in the magazine every quarter, and you can get it for free just by calling 877-397-5666. As part of this change on Wall Street to a fiduciary rule, mutual funds are changing. This was just in the Wall Street Journal this morning. Years ago, right about the time I got into the brokerage industry, which was a very long time ago in the early 80s, all mutual funds had a front-end load, a commission that was paid to the broker, and they charged annual management fees and expenses to run the fund. Then they decided to compete with no-load funds from folks like Vanguard. The industry changed the way they structured their funds to confuse you. They created these funds that are no load, sort of, but not really. And they called them contingent deferred sales charge funds, or no front load funds. No load funds. That is not a problem with your radio. That is how we were told to sell them. No load funds. We were encouraged to make them sound like no load funds. You just, take a break. No load funds. And what they did was, instead of having a commission up front, they put the commission on the back in a surrender charge that went, from 7 the first year to 6 to 5 to 4 to 3 to 2 to 1. And also tacked on what was called a 12B1 fee that went as high as 1% a year. In addition, over and above the management fees that were charged before. Those 12B1 fees are now considered, under the fiduciary rule, to be a commission and can make that product unsuitable from a fiduciary standpoint. Excuse me. So what happened? The industry has suddenly decided to create a new kind of mutual fund. They call them clean funds. Clean funds. What is a clean fund? A clean fund is just a fund that has been cleaned of all the dirt that the mutual fund the mutual fund industry added in these higher fees. So they're just kind of going back to the way it was, just without that front commission. So they're kind of sort of no-load funds, or what they say, how they refer to them, clean funds. We'll be back.
Tom and Don are talking real money.
Let's make a deal. We need reviews for our podcast to make it more popular, and you'd probably like a free year of Real Investing Journal. So, I'll trade you a year of Real Investing Journal through a $15 coupon code in exchange for a review at iTunes for the podcast Talking Real Money. Here's how you get your coupon code. Go to iTunes, write a review of Talking Real Money that at least goes into a second line, drop me a note at don@talkingrealmoney.com, along with the text of the review. I'll go check. As soon as I see it there, I'll send you the coupon code, and you can order the only real investing magazine, Real Investing Journal, and get the first year free. That's all there is to it. Just send me the copy of your iTunes podcast review to don@talkingrealmoney.com, don@talkingrealmoney.com, and I'll give you a coupon worth $15 off Real Investing Journal. Now, this is a limited time offer, and there's only one per email address, so go ahead and submit your review to iTunes, and then send it to me, don@talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Because it's really, truly important that you get this right. Carol, you're next. Welcome to Talking Real Money.
Hello.
Hey, Carol.
Hi.
What can I do for you?
I have two questions. Well, I recently retired. I'm 67, and I have only about $50,000 in my 401k.
Mm-hmm.
And my banking lady said that if I took that money and put it into the Franklin Templeton investments.
Mm-hmm. Could I just interrupt and tell you that right now I actually want to throttle your banking lady? Not physically, but
really?
I'm thinking I'm thinking the thoughts. It's not your banking lady. This is a stockbroker in a bank. This is a salesperson in a bank. Trying to take your perfectly good 401k probably, and generate for herself and her bank a commission of 5 3/4%.
Right. She said it was 4.24%, and I think that's
4.2. Okay, that's still a lot when you can go to Vanguard and do funds that are as good or better for zero up front. And let me tell you, as one who many, many years ago, and I think it's enough years now that I can say I'm fully recovered as a stockbroker, but as one who did it, their goal is not to help you. Their goal is to sell to you and move on to the next client.
I gotcha.
So
okay,
I would avoid them like the plague. Now, let me ask you real quickly, Carol, what is your 401k invested in now? What kind of investment vehicles are offered to you within it?
Well, it's Fidelity.
And did this person actually have the gall to tell you that Templeton was better than Fidelity?
Well, yeah, apparently so.
Oh,
she must
Fidelity's
think I'm
an excellent
old and
company.
Retarded or something, or old.
Well,
and
no,
decrepit.
here's what they think. They think that you and everybody else is naive, and the reality is most people are naive, and they'll succumb to these sales pitches. And it's sad because trillions of dollars, many billions every year, and trillions over the last few decades have been sucked up by these really useless people who do nothing but sell something and then move on. They're leeches.
Okay, well, I'm glad I didn't do that.
I am too.
But
as a matter of fact, your
question,
401k is probably perfectly fine as it is. Maybe it needs a little tweaking, but go ahead. What's your next question?
Okay. My mother recently passed away, and my brother is the executor of her two properties, or her estate, I should say.
Yes,
we do
ma'am.
have an attorney. There's 4 of us children that are going to be inheriting about $1 million between four of us.
Okay. All right. And
I'm just wondering, I would like to pay off my mortgage if you think that's a good idea. I don't want to necessarily invest it all because who knows how many more years we have. My husband's, in his 70s. And I'd like to perhaps put some of that money on a different house for my daughter, only under our name.
well, now we're starting to get into some of the complexities of estate planning. And with $1 million, you're going to need to actually consult with an estate planning attorney to get this set up properly. As far as investing it, you're going to want to invest some. You may want to do something nice for your daughter, but it may be advantageous to possibly gift some of it to her. You have to ask about that. And then about paying your house off, that really comes down to being a personal decision.
Talking real money.
Hi, brief break time. I'm Don, and I really wanted to share this with you because this is something I'm really excited about. I have taken much of the work that we do for our online Real Investing Journal and put it into a quarterly magazine that is, I have to say, pretty good and pretty cheap. And it is the only publication I can find anywhere that is totally devoted to real investing. You will find no business news there. You will find no lifestyle information. You will find no hard news, political news, speculation stuff. It's all about the science and the process and the discipline of real investing, and it's a way to keep you on track toward a better future. It comes out 4 times a year, and it's going to cost most people $25 a year. That's all, just $25 a year. But because it's brand spanking new, a limited number of people can become charter subscribers at the lifetime price of $15 per year. Plus, I'll get you a copy of the very first issue as a bonus while the supplies last, of course. So here's all you need to do. Just go to realinvestingjournal.com/subscribe and subscribe. And you'll start getting it in the mail every quarter. If you're one of the first 200 or so to subscribe, you'll also get the very first issue as a bonus. So be one of the first to get the very first magazine ever about investing and nothing but investing. Real Investing Journal, and you can subscribe right now, really easy, realinvestingjournal.com/subscribe, realinvestingjournal.com/subscribe. Now back to the show.
Reality radio for a really great future. We're talking real money.
Talking real money today. I'm Don McDonald, along with, of course, all of you. Tom's taking a break this weekend. The number is 877-397-5666, 877-397-5666. Before the break, we were talking to Carol. I was talking to Carol. We were listening in. And we were discussing she's still there?
Yes, I am.
Carol? You're still there? Okay.
Yes.
Talking about your $1 million and that you'll be inheriting and what to do with it. And let me just go back and tell you again, paying off your house. What's your mortgage payment? This is for edifying everyone. How much is your interest rate?
$465 a month.
Okay, what's the interest rate on that? Do you know?
Gosh, I think it's 5 something.
Okay, so it's relatively low. Do you plan to be in this house for a long time, like the rest of your life?
Yes.
Then pay it off. Pay it off. Because it becomes a very powerful lifestyle choice because your feeling of security is going to rise dramatically. Now, as for buying your daughter a house and other things you should do with the money, I would strongly suggest that you sit down with a good elder law attorney and discuss all of the ramifications from an estate planning perspective. I would also suggest that you put away enough money to take care of about a year's worth of expenses so you can sleep at night. And then you take the rest of the money and you go out and you find a fee-only true fiduciary advisor. Not somebody at a bank, not somebody at a brokerage firm, not somebody with an insurance company. They must be fee-only, not fee-based, and they must be willing to put into writing that they will always act as a fiduciary, always. And they should never charge more than about 1% per year to manage your money, okay?
Right.
And if you have any other questions, we're always here. Just give us a call on Saturdays, okay? Good luck, Carol. Thanks for the call. 877-397-5666 is the phone number. That fiduciary business that we're talking about. No, it's a weird word, but it's so important that you only work with a fiduciary. And I don't mean somebody who says, hey, now I'm a fiduciary. No. Are they always a fiduciary? If they sell loaded Franklin Templeton funds, they are not a fiduciary. If they sell you a loaded annuity, they're not a fiduciary. They're not. If they're not selling you the very best product for your circumstances, and because we cannot possibly know the future, they can't say, well, this is the best fund. You don't know they're going to be the best. The only delineation now is what does it cost? Fees mean more than almost anything. You know, if you pay less, all things being equal, you're going to make more. So it's so important that you make sure you're always dealing with a fiduciary. And this is one of the problems with this new Labor Department fiduciary rule, is while it's great progress, it is progress. Wall Street hates it, so you know it's progress. The loaded mutual fund companies hate it, so you know it's probably good for you. But the problem with it is going to muddy the waters. Now, anybody who gives financial advice on a retirement plan is going to be able to say, yeah, I have to act as a fiduciary, but be very wary. They're going to start handing out these things called BICEs, B-I-C-E, Best Interest Contract Exemption Letters. And they're going to come up with some flowery con artisty way to sell this thing to you, saying, well, this is just something that the firm requires that we sign. You don't need to read it. Come on, you don't read that stuff most of the time anyway. And this best interest contract exemption letter allows them to not act in your best interests, which is what they want. Why do you think this has been fought so long and so hard in Washington? Because the brokerage industry, the investment industry in this country, much of it hates anything that causes or forces them to be more transparent. Transparency is their enemy. If transparency is your enemy, what does that make it for you? Transparency is totally your friend. Absolutely your friend. So make sure you ask, are you always required to act in my best interest? And if they say yes, say, would you mind putting that in writing? Making sure that the word always is there, maybe even underlined, and have them sign it.
Realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done?